Good afternoon. Scott Redler, Chief Strategic Officer, T3Live.com. By the way, it's 10 to 2. It's not 4 o'clock, so things might change if you watch us after the close. As of right now, market's under pressure, and I want to go over some key levels and some thoughts because this morning in the morning call, we didn't really know what to expect. You know, the futures were all over the map. 6 o'clock in the morning, woke up, was like, oh my goodness, how the hell are the futures up 15 handles after yesterday's bearish sell signal? Day to take notice, outside day, red dog reversal. Did I say all those things? Yes, that's what all those things were, wrapped up in one, which all tells you to reduce some risk. So a lot of guys that probably reduced risk like me was like, why are the futures up 15 handles? And anyone who went home short because, wow, first sell signal to get short in a while, you know, good time to maybe test some shorts. They were like, oh, how am I going to get out of this again? And then by the time 8:30 rolled around and Draghi didn't give everyone the injections or whatever the hell people want to parallel that with, or it didn't come through with a bigger boat for ECB. The DAX got absolutely annihilated. The euro bounced. The dollar got hit hard. The bonds got hit hard. Like everything just changed. So, but then by the time 9:30 rolled around, spiders were still up about 30 cents. So you had time to use the pivots from the morning call to figure out whether A, if you didn't reduce risk enough yesterday, you had a spot to get out, and if you happen to be short, a spot to add, or if you happen to be flat, a spot to maybe put on some shorts because, you know, maybe there's continuation. So I will say this week has not been easy. It's been very erratic, and if you look at the chart of this SPX, it looked as though on Tuesday we were going to have a breakout above this inside range to get back towards monthly highs. And that is what it looked like after Tuesday. And then what did the market look like after Wednesday? What is that? This is what you call an outside day. This is what you call a breakout failure. If this market was any friggin' good, it would not have got back below this 2093. Not only did it get below that, where you could have sold some stuff, you know, and reduce risk, it then went below the prior day's low, which was 2082, giving you a really strong outside signal to get out. And then today, what do? We wrote down 2082 saying, you know what, if the sellers have any control, okay, they will break the market below 2082. And all of a sudden, we're already below the 8-day. Okay, so if you reduce risk when you break below the 8-day, which is one of my rules, if you reduce it after the 21-day because you give it more time, you also had a spot. And then, you know, you go into today, and so far that's what you have. It doesn't look like much, I guess, but you know what? If you're long and you bought yesterday and you continued, you know, probably in a lot of pain today. But what did it do today? What did it give you the chance to do? It gave you the chance to make an adjustment around this pivot. And if you go to Twitter, I guess you'll see my chart. I said, you know, can we hold this 2070? What was that? 2077. Actually, you look at the spiders. I used the spiders on Twitter. I didn't use the SPX, and that was it. Small red dog reversal right here. One sell signal, another sell signal, false breakout, right? False breakout. If you look at, again, use your resources. You look at the post. I said if we're any good, this was like, I don't know what time yesterday, it was pre-market yesterday. I said if the breakout is any good, it should hold above this area, which was 209.80. Not only did it not hold, it gave that back, and then it closed below the prior low. So two different sell signals, okay, to reduce. And then if you didn't take those and you wanted to wait, it actually gave you a chance this morning to get out when it broke below this 208. Let me get into there. Where is that? There it is, 208.23. And I think that was what the pivot was I had on Twitter. So breaks 208.23, continuation downside, boom. Broke this also small ascending channel here. This is where we broke out from. And now, I don't know what's next, to be honest. You know, the momentum, though, has been lost. If you were thinking that, you know, this market's going to go into year end, we're going to break above this inside flag like we did here, go to the highs here, that got put on hold yesterday or derailed, and then now today, you know, definitely not. So now the question is, you know, do we really unravel or not? At this point, your next level, I would say, you know, if you go by levels, okay, would be right here. You know, I guess you go across where the moving average, where this moving average is, and you know, I guess you want to write down 205.99, and then what is it? 200-day comes all the way down here, a little closer to 204.50. So all of a sudden, the momentum is lost and the trade has changed. That's all you have to know is yesterday you get tactical. Today, if you were tactical and flat, you get short there, or you get out of the rest of your longs. And now here, do you short more for a down open tomorrow? That could be a little tough to do, but it doesn't mean you just buy this dip either because, things happen fast. And there's a lot of things going on in this world. The world is friggin' crazy. My heart goes out to those in California, that whole mess in San Bernardino. I don't even know how to pronounce the name. Just crazy. A guy imports his wife from Saudi Arabia, and then they have 12 pipe bombs in their friggin' house and go there and put on armor and blow up people for what? Anyway, I'm not going to get into that. So question is now, we're in December. The momentum has been lost. We have the jobs number tomorrow. We have the Fed perhaps in a week. What's going to happen here? Can you be long and sit on swing trades into year end and get paid and have Santa put money in your pocket? Doesn't seem that way. It seems like you have to take trades, you have to pick spots, and you have to be very careful. You can make money both long and short. So like tomorrow, just say this was 4 o'clock and it's not. The way I would approach tomorrow is I'd probably go home flat, okay, and then I would say, okay, let's go back to the chart and write down, today's low, if this will happen to be the low, and then see what happens tomorrow. See if whatever this low is, which for right now is 206.33, that's your pivot. Below it, you have this level here. If it holds above it, maybe it tries to retest this broken trend line a little bit closer to that prior low at 208 or not. And then be flexible because this is where all the major support comes into play. Looking across the board at sectors to see if they could help you, not much. We broke above this prior peak, gave that back way too much yesterday. That was your out. Downside continuation. In my note, I wrote down yesterday's low in all of these sectors to use as your pivot to either get out of longs or get more short. And if you used it, smart. That's part of the whole thing is preparation. And now this is down to the 21-day. And I don't know how we're going to close in the next 2 hours, but we're on lows. And, if you're trading Versalo, if it breaks it, be careful because it could, head a little bit lower down to here even. So that's there. Not much you can go on. As far as the IBBs, anything to go on here? Nope. IBBs ever since this Poden down day here, which shouldn't have happened, this one day engulfed these three, it's been weaker. Definitely more weaker than stronger. Yesterday, put a lower high in, gave you a small red dog reversal right there. If you take a quick look at it, closer up, right? What did it do? It pushed through the prior high, failed. Didn't even engulf half of this big bar showing you sellers in control, and then pow! So that gave you, this day right here was your day to take notice, and then it had its power because it never took back half, and then there you go. So now I guess we'll see what happens tomorrow if there's a trade into this area or not. This is where it broke out from last time, so perhaps there's a trade into this area tomorrow depending on how they do the jobs report. But 3 down days, I would say don't be balls to the wall short here. I would, cover and then feel if there's a tradable bounce there if we see that. Banks, gave you a shot across the bow yesterday when, they didn't, when they gave back the majority of that prior session. If you look here close at the XLF, the XLF had a nice little breakout day here, and then look at that size of that move yesterday, engulfed the entire thing with power. That was the market saying banks aren't ready, and if you got out then, you saved yourself a heck of a lot of pain here. And now I guess you could say there is some support going across, but then more potent supports there, but momentum has been lost. The 8-day is done for now. We'll see what's next. Then you got to go to the FANG stocks, the stocks that have been holding up well, that feel like they could play catch up to the downside at any given point. So if you're just conditioned to buy that dip, there's a time when you might get ran over. So let's go to Google, see how Google looks. Google gave you a topping tail yesterday. If you're looking for a reason to be short, you had your red dog reversal here, okay, where it pushed through the prior high. What was that high? That high was 785. Went to as high as, what was this high here? As high, no, hold on. Went as high as, this was, 793. This was 785, went to 793, came back below, and then had your downside. This is still in the game. Okay, this trend is not broken, but be careful just in case it does. So for Google to start to really accelerate to the downside, this 760 is pretty big. Right now, all it did is take out some fluff and still acts okay. Still in this trend since this big gap up. So it is hanging there. Be careful with that level. Amazon, let's see what you're doing. Still, also, if you're in pain now in these stocks, you better be careful because these stocks haven't done anything yet to the downside. I would say for Amazon, your big level is right here. If this were to break, you better be careful, considering it's the best of the best. Yes, it's got the best news out there, but still, if the market wants to go down and this wants to give away and people only give up gains, you had, two different things here. You had your red dog reversal here, passed through, squeezed, couldn't go anywhere, that's your out. And then it traded below this today, that was your other out. Now I would say this is very important right here. This is, 664-ish. Okay, we'll see how it closes today. Right now it doesn't look so hot, so I'd be careful, considering especially the size of the move that this Amazon's had. You just don't want to be left there. Things happen quickly. I remember when this happened real quickly. A lot of guys, even though it came back, if you bought it wrong, with not seeing that outside day there, you got your teeth handed to you. So here's where you are with Amazon. The 21-day, which is still deemed healthy to hold, is all the way down here. So if we were to give way fast, this is 656. It's only $12 below that. So just know what you can handle. Facebook, I got out of yesterday, thank goodness. You had your red dog reversal into resistance. What's a red dog reversal? I'll probably go over this in my seminar tomorrow. You guys should go to White Plains Saturday. It's going to be great. My last one before my back surgery. This is when I traded through 107.15, went as high as 107.92 and failed. That was your out. Now it's getting a little questionable. Now it's below the 8-21 day. If Facebook doesn't get saved here, okay, what is this level, red dog? Red dog, red dog. This level is 103.75. There's really an air pocket down to this moving average. And if this happens in Facebook, going to be a lot of people getting, maybe I have to lock in my gains. Maybe Zuckerberg's giving away too many stock to charity and is not going to be shareholder friendly. I don't know. All these things went through my mind when I took it home 2 days ago. But anyway, I'm out of it now, and it still looks good. But again, the 8-21 day has not been broken since here. So this is very testy, guys. If you're stuck in the, I would have been stopped. I got stopped out. I would have today when it couldn't go green. I would have been out of it. So now if it were to break this is that next spot down there. So be careful. Write this down. It might push through and come back above, and that's a swing long, and that means things are getting contained. But if it doesn't, it's a pretty big trend right here, that could get a little bit of downside. Some say, Apple's horrendous, but if you take off your bullish glasses, which I tend to wear in Apple gave some clues that the market wasn't going to break out. I was playing Apple around 118, thinking maybe we break above 119.30 and see 121. And then on Tuesday, when the market rallied with all the new money in the first day of the month, it went down. So I got stopped out, and maybe that was telling you, we could isolate Apple. Apple's in its own world. No. Usually if the market's healthy and Apple's going up, the market goes up. When Apple goes down, typically at some point it goes down. It did that a few times this year. So Apple on Tuesday going down in the face of a strong market was maybe telling you something, but whatever. You look at Apple now, and here it looked okay. This is when I was playing it, right? You had the Goldman Sachs upgrade. Oops, sorry. Let me get back to this. Hopefully I could get back here without a problem. Freddie might have to come to the rescue. Here comes Freddie. Freddie to the rescue. I hear the door slam. So here he comes. Freddie, I want you to say hi, though. Come in, quick. This is Freddie. Freddie's not there.
I'm not on the screen. That's fine.
Okay, here we go. We're not doing this over because I got to go home. I'm in pain. Okay, Apple. Nope. Okay, listen to me talk. So basically what I want to show you is how Apple failed at around 118 and got stopped out around 117.5, and now, it's continuing to the downside. There's the SPX. All right, and now here, Freddie, come here a second. Oh, you got to put yourself back on. He's in tech. Okay. You'll see Freddie another day. So basically, this is when Apple looked decent, okay, and seemed like it was going to hold up. It was above the moving averages. Here was Goldman Sachs upgrade. Looked as if perhaps, we get a decent move if it broke above this. But what happened? It didn't, and broke lower. So that got me out, and that kind of told you maybe the market was heading down. Here was your, failure. This was the day I got out of it. I did not get stubborn, thank goodness. And some people probably got short. I wish I got short. I did not. Okay, but you could have because it was that weak, and some guys told me to get short, and I just didn't. And here's when, basically the momentum was lost below this low here. I listed this on Twitter a few times, 116.86. Now, boom, filled the gap from Goldman Sachs. Who knows why they really upgraded it? Maybe they wanted to get rid of stock and do a false rally. Who knows? But now there's no momentum here. It's back to same old, pretty much crap, to be honest. Sorry for my French. And now we'll see what happens here, I guess. Is there a trend line here? If it comes into this, if this were to break, chances are you could see a bit more trouble from Apple. So be careful here. Okay, you can't just hide there, So I wish you could. And again, it would have been nice if it worked out and it didn't. Maybe that gave some clues to reduce risk. It has done that a few times. You go back to the chart. If you remember, back here, when Apple had its gap down after earnings, it never rallied, and this stock broke the 200-day here well before the flash crash. This is when it broke the 200-day and became really horrendous, okay, and stayed below the 200-day before breaking below this pivot, and then this was the flash crash. So here, basically failed into resistance, didn't even make it up to this resistance, and now just be a little careful here, especially if you're active from the long side. So that'll be important tomorrow. You did get a somewhat of a commodity reversal because of what I guess the ECB did not do, and that caused gold to get a bid. I talked about that this morning. Metals actually, went above a prior high and is now above it and stayed above it. So see if I guess this changes here. So far, it's just a day. A trade. I talked about if you are shorted versus high to get out of the way, maybe get long. And now you have oil, which could be a good thing, at some point, because, we didn't want oil below 40. Well, now oil held, so it's not really transpiring into gains today because I don't, for some reason. But anyway, oil held, and we'll see what happens here. Oil is up, but this time the XLE is down, and the XLE looks pretty broken. This is when, if you were in this thing, you should have gotten out when it broke this inside range or got short, and now it's coming into some major support. So see how it handles this. If this does not hold this area, some guys are saying this is a pretty gross-looking head and shoulders pattern, and if it were to break this neckline, you're talking 71.65. That's a move back to the lows, and that probably would not be good for the overall mood of the market. I've been talking a lot, and just to reiterate, it is now 8 after 2. That means I've been babbling for 18 minutes and just giving you some thoughts. But again, this is probably my last day on video until another week or two. Just if you haven't heard, I've been endurance training for 15 years. I've done 2 Ironman, 5 marathons, all for charity. And I've been having some back pain the last few months and wound up getting a sequestered disc where a piece broke off. It's in my canal. It's suffocating my nerves, so my left quad is numb, and so is my shin, and my leg is actually 15% smaller than my right. Sounds bad, and it actually feels bad, but meds could help that here and there. I've been on a medical cocktail for about a week to get myself functional, so on Monday I could have my surgery. Once the surgery is done and hopefully everything goes well, a week I'm back to somewhat functional. 2 weeks I'll be back in and more consistent come 2016, stronger than ever. 3 weeks physical therapy. Within 6 weeks, I could do spin classes, go in the pool, run on a treadmill, and life will be great again. But the last 2 weeks have kind of sucked. A lot of friggin' pain. I wish it on nobody. But again, you deal with it, you get stronger, and that's what I hope to do. And thanks for all the well wishes out there. So Monday and Tuesday, I will not be writing my note, and I most likely will not be on Twitter. Come Wednesday, my eyes are open, I'm moving around, maybe I'll start tweeting a little bit, I'll start writing half my note, and by the following week I'll probably be all in writing my note and at some point come back in to start doing videos and then back to normal. At this point, do I leave you with the fact that, in the beginning of the week we weren't sure if we would break above 2100 and be off to the races and see 2130 or 2150 and hold on to the FANG stocks and, make it easy into year end. Didn't seem the case. Yesterday you had your red dog reversal that turned into an outside day that could have had you reduce risk, could have had you get short, or get just flexible or tactical again. And then today you broke below that low, showing sellers having power for the first time in a while. So before I close, let's see where we are with the SPX because it's only 215. On the lows, again, outside day, false breakout in the SPX. Here was your sell signal. That was your upper level sell signal. Here was your bottom level sell signal when it crossed above below that yesterday, and here was your sell signal today when it couldn't hold. Lots of spots to make adjustments. I'm glad I was in today because I put those charts on Twitter, which you could check out this morning, and I did a morning call, hopefully giving everyone a little bit of advance notice that the tape could have changed. Now the question is there a chance of a rally into the end of the year? You know what? If you're out of the way, it doesn't matter. You know, what we could look for is an oversold signal, which we're not yet, and get some kind of red dog reversal at a lower point. Where are those points? Let's look at the chart. You know, I would say, you have an area where all the moving averages, kind of collide here. So this will be an interesting spot, somewhere around 2044. If we see it fast, that could be a spot to at least cover some shorts or maybe look for a buyable move. We'll see where today's low is. I'll talk about that at the close. And then you have here. And then I think if you take out too much below this, you're talking game over. But at this point, this upper channel has been breached, and the longer you stay below it, which we're a lot below it, the more the sellers have control. And yes, we're still well off these lows. We've probably given back now, if you use your Fibonacci retracements, from just this move. Some guys will say, okay, did we give back too much of this move to invalidate it? You go here, you press the bottom, you go to the top, and this is about the 61% retracement of this move from the low to the high. So much below this, and it negates everything. If we were strong, we would have held here. Okay, so with that being said, let me see something. We're in real time here. This is live. Okay, let me just tell my wife to send me an Uber because I got to get going. This is real time. Let's go. Selena, order the Uber. Just so you know, if you're not, you don't have an Uber app or you don't take Uber, it's crazy. I live in Short Hills. To the Newark airport last week, Uber was $19. My taxi was $65. I took a taxi to 14B where I take the ferry one time. That taxi was $85. Uber was $30. So use Uber. Very disruptive, great, situation. Let's hope there's a disruptive thing out there for college tuition down the road with my son being 7. So anyway, just to keep babbling, because I am on a medical cocktail for all of you out there who are enjoying yourselves here. It's Thursday. Maybe you're watching this with a cocktail later and you avoided today because of the outside day yesterday, and you're embracing the volatility that could potentially come because you're not trapped, which are all things I try and teach you as part of my community. But anyway, let's go back to the chart one more time. Here you are near the lows. This is that 61.8% retracement of that. And I guess if you use, if you want to say, okay, I want to use my Fibonacci retracements from the rally that started here to see if there's any validity to this. You go to the top, and the 0.38% retracement is where we stopped last time. And then here's your 0.50, and here's your 0.16. So this would be, I think, very, a good stance by the bulls to hold, which is closer to 2042, much below that. I don't know. The what could hit the fan, and that would be your next point of reference, and that would be your other one. But as of right now, staying below 2077 to 2082, keeps the sellers in control, and then we'll do pivot by pivot as this transpires. So in closing, I want to thank everyone again for being a part of my community. I feel like I'm in your community as well. Everyone tries to add value. Much better than sitting in front of a computer screen and just having a bunch of red and green bars and trying to trade and judging yourself with your P&L versus talking and interacting with people around the world, because typically, or that's really what makes life interesting. Different people, friends from everywhere, and trying to add value amongst what you do and what you do outside of what you do. Yes. And with that said, I will text once I open my eyes at some point, or tweet Monday afternoon to let you know that something wrong didn't happen, and then with time I'll be back in the loop. And thank you for your patience, and I wish you guys well. Listen, live and trade within your means and enjoy life, because it could be difficult and it's way too short at times. Have a good one.